to Friday Takeaway. 2018 certainly started with a bang, helped in part by Sime Oil. However, you have to wonder if this is what the potential end of the world feels like. So on New Year's Day, North Korea's Kim Jong-Un blatantly threatened the US not to test their nuclear capabilities, saying that he had a button on his desk at all times. To which Trump couldn't resist retaliating, saying that his button was even bigger and it works. Apparently, this is what passes for diplomacy in this day and age. Back home, the Court of Appeal has postponed the sentencing of 4 former directors of gold bar investment firm Geneva Senyum Berhad. This was because one of the directors, Chin Wai-Leong, had appointed additional counsel in the form of Tan Sri Muhammad Shafi Abdullah. And if that name sounds familiar to you, he was the prosecutor in the Anwar trial and represented Razak Baginda in the Altan Tuya case. CIMB says that large IPOs in Malaysia could raise more than 10 billion ringgit in the first half of this year. Last year saw the semblance of a spark returning to the IPO market in terms of the amount raised, with Lotte Chem Titan being the biggest IPO in 5 years. In the pipeline is QSR Brands, Edra Energy and Bank Islam Brunei. The FBM KLCI is on fire this week, breaking through the important 1,800 barrier, closing yesterday at 1,803 points, the highest it has seen since May 2015. It just kept climbing this morning and was trading at 1,812.3, buoyed by the Dow's record run, stronger oil and movements of some key heavyweights and foreign buying. It's amazing what difference a few days makes, right? Because according to Hong Leong Investment Bank, the KLCI was the worst performer among ASEAN countries in 2017, but expects it to hit 1,880 points in 2018 as GE plays out and stronger RM is a factor among others. But speaking of Sime, as the interest surrounding election-linked stocks continue to play out, Sime Darby had a pretty good week. Of course, the Sime that we are talking about today is the demerged form of what was formerly a huge conglomerate. With plantation and property divisions spun off, its businesses are industrial, motor, logistics and healthcare. So Sime saw highs it hasn't seen since 2008, with the stock soaring as much as 12% on Thursday. This morning though, you couldn't really stop it. It's up even higher at 2.87 ringgit, 60% up from a year ago. So the story was that as general election looms, large investors are looking to government-linked companies. Plus, since the demerger, analysts have called the valuations actually rather attractive. So, has the share price run up way too far? Analysts say that while the demerger has allowed more dedicated management attention to all of those segments, but all the current asset value prices are already priced in. In the longer term, it would be the successful execution of its long-term plans that would be the catalyst. Analysts are split pretty evenly, with slightly more on the buy side, with the only holdout being TA Securities, which has a sell at 1.97 ringgit. On the back of better oil prices and prospects, a number of oil stocks saw upticks in their movement. Established in 2002, it is one of the core businesses of the UMW Group, and it entered in the field through a sorted portfolio of greenfield and acquisitions of assets. Oil had hit fresh highs on Wednesday, topping $61 per barrel for the first time in 2.5 years. For 2018, the talk is that oil could potentially hit $80 a barrel, according to Yoon Chu Chong from Natixis Asset Management, due to restrained production and this incentive apparently to keep up appearances ahead of Saudi Aramco's big IPO. Bolstering oil price, of course, was also concerns over protests in Iran, but analysts say that the country's supplies actually shouldn't have an immediate risk, which means that once the knee-jerk reaction has run its course, you could see some pullback. Over the week, UMW's share price was just on an upward trajectory all the way, trading at a high of 38 cents this morning. Looking over 3 months, it is up 8 cents or around 27%. Analysts, however, are largely again in the buy camp, with target prices ranging from 51 cents to 29 cents.